Fantastic. Good morning, my fellow traders. This is our daily market review on Euro US dollar and the XY. I do this market review every single day. So I bring you update and what I'm looking out for and why I'm looking out at a specific area and what am I expecting on that particular areas of interest. So that is very important that I say it out. And also I gives you guys, basically the much things I want to put to you guys is how to determine your daily bias, how to know where the daily bias is going to be, whether bullish or bearish. And now sometimes you could have sometimes the bias could not be clear, but you have an ideal scenario on what to look out for if it's going to be bullish and what to look out for if it's going to be bearish. Yes, that's very important. It's not every day you can be able to determine perfectly that this today is going to be bearish or tomorrow is going to be bullish. But there are certain parameters that depict that will depict if it's going to be bearish or bullish. And also, if you have various parameters to look out for, and you can actually have both ways, but now you are not going to run into being engaging in the price. Rather, you will have to take your time, look for a certain things to work out. That is, if it happens like this, then you want to go like this. If it goes like this, then you want to go like this. This whole thing is very important that we all have that in our daily schedule, right? What we want to see and what we makes us to engage in price is very important. So not wasting our time much, haven't a as I have explained on how to, on the effectiveness of determining this daily bias and how to approach them, on what to expect when you are approaching this daily bias. Okay, especially on the days that you are not totally specific about the direction. Just for example, like we talked about yesterday, we said if we are going to go lower yesterday, then we'll be seeking the sell side. Then, if we are going to go higher, we'll be repricing back in to fill in those inefficiencies, and now we reprice higher. So, but now it's now left for us to now determine on the lower time frame what are those things that will occur on lower time frame for us to be a buyer. Now, like yesterday, we take out previous day low, and at the opening price, one thing that's very common, especially on the days that you are not specific about where it is going to go. Now, on the opening price, if the on the Nigerian opening price, the price, for example, like yesterday, on the Nigerian opening price, the price will go down to take what some short of what sell side liquidity if you are going to go higher. Then after that, you can mark out your New York opening price and the Nigerian opening price. Now, if the price is trading below the Nigeria opening price and also below the New York opening price, that is an ideal discount for you to engage. That is, I mean, strong discount on a daily time frames perspective. And also, if the price is trading above previous day high, sorry, above new Nigerian opening price and also above Nigerian sorry, and also above the New York opening price. That is an ideal premium price for you to look out for. Now you can now find any sell side liquidity that is above that New York opening price. All right, since the New York opening price occur after Nigerian opening price, and if it is higher, then and there is another scenario where the London or the New York opening price will be trading below the Nigerian opening price and the market will still go lower. sorry, we still go lower. All right, but that uh that such days occur, like with my own statistics, such day only occur when the everything is in alignment. You know where the market is going. Sorry, so these are very important. And again, after, if you trade London session, then you mark out your New York, your previous day New York session, you the high and the low. You mark out your previous Asian session, then you mark out any what or high or low that you can potentially target as your areas of liquidity. Now, if you combine these characteristics in price and you work with them vividly, over time you are going to see that everything will be in alignment, and you will be able to trade with more higher probabilities and more capability. Your trade will, you will deliver how you say it. Okay, so these are some of the things, and I'm just bringing them small short, like small pieces every day, because I can't teach you everything in 20 minutes. Even before I still go back and talk about what we are looking for that day. So I hope this one I have said is another insight, is a very great insight that you are going to work with. So not wasting our time, let's kickstart what we have for today. Now, the Euro US dollar daily contract for Tuesday, 2nd of April 2024, deliver into the weekly range and filling in the inefficiency in price, and also showing us the confirmation that euro might be retracing into the weekly PDRAs. If you watch my weekly videos, you're going to understand the PDRA I am referring to. And just to say, to illustrate that, this red line is the weekly bearish order block that I am anticipating for price to retrace to. But also knowing that I have this bearish order block and also this bearish order block to look out for. So that is very important that we call those two things out. Now, I am very pleased to see euro repricing higher and filling the liquidity void. So as this is indicating a short lower time frame premium price inside a higher time frame discount price, so as to enhance the efficient price delivery lower. Today is the what? Powell speech ahead. Today we have the Powell speech ahead of us, and also the NFP coming up on Friday, which this price movement might not be very ideal. So engage with what? Caution. What I mean is that when we have this significant news ahead of us, especially the Jerome Powell today, and on Friday we have NFP. So this if we have this, one of the things I have learned over time, that if we have these two new, or if we have, especially if we are looking forward to NFP, there is something on that week that NFP is going to happen. The trading days from Monday to Thursday, there is going to be an irregularities, but you can still engage, but you need to be cautious, and it's not advisable for new traders to engage in such day. Now, I want to ask you a question. If you like, try and go and do your research. If you like, don't. But maybe I'll give the answer any day I want. What is an ideal or non-ideal price action? That's the question. What is an ideal or non-ideal price action? Now, let me continue. Currently, I am anticipating for euro to deliver into the daily bearish OB close to the current price. More importantly, the clear one in the 4 hour and 1 hour time frame. So the draw on liquidity is previous day high that will retrace lower inside the previous day candle body, but not previous day low. That is, I'm not looking for price to go all the way and take this previous day low, but I'm looking for price to take this previous day high, tap into this bearish order block. This little letter is the bearish order block. Tap on it, retrace back, then we might either continue going higher or remain stagnant, but not this previous day low, except Jerome Powell want to be wicked. Except Powell want to savage the market. So that is just it. And let's go to the XY. I'm trying to keep up, so because I have a lot of things to say on the lower time frame, which is very, very important, especially the lower time frame. So this is an SMT divergence. We have a higher high here and also a lower high on the DXY, which is a lower high. Yes, it's not a lower low, it's a lower high on DXY on Euro. So it's an SMT divergence, and this is the buy side liquidity we have taken, and our buy side liquidity on Euro is still remaining open. So this on the euro, sorry, on the XY, we can see that the daily bullish order block is here, which is this, and it's not even, yeah, it's a bullish order block that that deliver this gap, liquidity void that is here. And this is a glitch on my waist because I'm not using paid market. That's why this glitch is not, this is not a gap, this is a glitch, so it's not a gap. So I just want to say that in case it's different from your own chart. All right, so and the weekly PDRA we are looking forward to is this fair value gap and this very bullish order block here on the XY. So tomorrow, today, which is already trading, we are looking for price to move lower, tap on the lower time frame PDRA, then retrace higher. That is, we either might close bearish today or bullish, but not totally bullish, but just short term bullish. I'm not looking for this high to be taken, except Powell wants to do its own thing. All right, so that is just it. And let me go to the 4 hour time frame before going to Euro. So now on the 4 hour time frame, we can see that price opens and we are trading inside this liquidity void, and this is not a complete liquidity void, this is a glitch on my market. So on the 4 hour time frame, we can see that daily bullish order block, look how price respects that area. Look how we sit on it, like very, very, the body, I'm talking about the body of the candle. Look how we sit on it perfectly, that deliver this move and giving us another glitch higher. So I'm looking for price to go lower and tap on this bullish order block, retrace higher, but not completely what, cover this previous day high. So, and if we go lower to tap on it, we have cleared the previous day low, which is this liquidity we are looking out for. Then we are going to go higher, either come back. That means if we go higher and we come back, we have used it already, then there's no need to worry about it. Then we might be looking forward for price to move all the way to this area, especially before non-farm payroll. So if we get to this price before non-farm payroll, then I will be very happy because the non-farm payroll will give it an energetic move towards the buy side liquidity. So that is it for the XY 4 hourly contract. So not wasting our time, let's go to the Euro 4 hourly contract. So sometimes you can see that why I use these two charts is because sometimes the price action for one will not be that clear, and why the price action for the other will be very clear and vivid. For example, we have a fair value gap here, we have a bearish order block here, not like that on the XY, although we have a bullish order block on the XY, but the neatness, or yes, the neatness is not compared in terms of what uh in terms of the parameters we make use of. Now the euro US dollar 4 hourly contract shows how nicely price delivered into the price range. Now on the 4 hour contract, we can see that euro sweep previous day low and begin to price higher, that end up a bullish candle, forming a fair value gap or BC inside the price delivery for today. That is, we open, take out previous day low, price higher, leaving a fair value gap 2, 1, 2. Well, I'm looking forward to this second one. Then pricing higher, leaving a fair value gap or BC, which is buy side imbalance, sell side inefficiency above. Now I am anticipating for the euro to find its way higher into the daily refined 4-hour bearish order block and reprice lower into the fair value gap or BC, which could either act as a fair value gap or be converted into an inversion fair value gap if we trade below it. What I'm indicating here is that if I'm anticipating for price to get here this morning or during the London session, utilize this bearish order block, then reprice lower, then into this fair value gap. It's either now we are going to use the fair value gap to price higher, or we are going to use the fair value gap. If we price below it impulsively, it is going to become an inversion fair value gap, which is going to lead us to deliver lower, but not to take this previous day low in terms of today price action only. Not, I'm not talking about today and tomorrow. In terms of what today price action only, which is what Wednesday price action. All right, and I'm doing this video for for Tuesday price action, and I'm doing it on Wednesday. So if I'm referring to today, I'm not referring to Tuesday. I'm referring to that Wednesday price action. So I'm referring to today, which is Wednesday price action, not to take out the previous day low, but to take out previous day high and tap on the bearish order block, come back inside the range, and maybe either remain inside the range or go back and create a high that will sweep the London session. So let's go to the hourly contract. All right. So yeah, so I have a whole lot of things on my chart now, but so the Euro US dollar hourly contract shows how nicely price delivered an efficient bullish candle for Tuesday, 2nd April 2024 contract. The daily profile is an obvious 2 o'clock AM New York local time as the low of the day that sweep previous day low and reprice higher. And the high of the day is formed at 10 o'clock AM New York local time that price rally higher and fall short of the 4-hour bearish order block. Someone says, what is the need for this high and this low of the day? Now you need to be able to identify where the high of the day is and where the low of the day is, so that to gather what statistical values for future trading, for future time. Since what we are doing is already future trading, so you need to be able to predict the future, and you do that with gathering what different statistics. Now casting forward, I have two ideal scenario for price. Either one could efficiently delivered in today price range. One, first of all, I have two ideal scenario. One of the scenario is that this is the the Nigerian opening price, and this is the New York opening price. Now we are trading almost close to the New York opening price. Now, if eventually we find our way higher during the London session and tap on this is hourly bearish order block, and this is what the daily bearish order block. So if we find our way within inside this range and price delivered begin to show what a signature of going lower, then that will make it more ideal for me to want to engage in being a seller, but not to be a seller and totally target the previous day low, but to target this internal range liquidity, which is this sell side liquidity. Then I'm going to begin to watch how the market react to this fair value gap. And also, if price delivered without going higher, we begin to deliver lower, and we are below the New York opening price and also below the Nigerian opening price and get to this area, then I want to engage to being a buyer and target what this high or the any high that is created. So at this high and or any high or any other highs. So that is the two ideal scenario I'm looking out for. Now, what is the difference between what is an ideal scenario and what non-ideal price action?